Pretty much every buyer we work with is a first-time home buyer. Yes, there's the ones that are entering the market for the first time, but maybe you're a first-time single-family home buyer, or a first-time condo buyer, or a first-time investor, first-time hillside home buyer, first-time beachside home buyer. Whatever it is, we're gonna break it down for you in this video. This video is gonna be so information-packed. If you're interested in working with us after this video is done, you can get in touch with us at info@dwellhawaii.com. By the way, my name's Maila Gibson-Bandman, realtor on Oahu, along with my partner, Koa Cassidy. Let's jump right in. Number one, you call me and you say, Maila, I'm interested in buying a house and I just don't know where to start. Our first conversation is going to be about knowing what you can afford and also what you can sustain. Typically, I'm going to have a quick conversation with you about why you're looking at buying, and we're gonna get excited together. And then if you haven't already spoken with a lender or don't already have a relationship with one, I'll connect you with one of our lending partners, and they're gonna have maybe a quick 7-minute conversation with you about how much you get paid, how you get paid, whether it's a salary or if you get paid every 2 weeks or if you're hourly. They're gonna ask for some of your tax statements, and then they're gonna proceed to ask you to fill out a mortgage application. On that mortgage application, it's gonna ask for more specific information. It's also going to ask for your social security number, because they are gonna have to pull your credit, to check your credit. That's also gonna line up with how much you can afford when it comes to buying a house. And then once they get back to you with that qualification and that monthly payment, then we get to go out and go shopping. Before we move on, let's stick a little bit with the sustain part of this. Buying a home is not only about the mortgage payment, but it's also about understanding that the costs don't just stop there. And again, some of this stuff is going to be basic for some of you that are watching, because I am speaking to the first-time home buyer at this point. But those of you who already own a home might be nodding your head right now and agreeing with me. So you've got your mortgage payment, but then there's also the costs to maintain the home itself. If there's a leak in the roof, you're going to be the one that's responsible to fix it. If you live in an association, there's going to be an association fee that you'll be responsible for every month. There's no calling a landlord if there's a plumbing leak of some sort, or hey, in Hawaii, you're gonna need to paint your house maybe every 10 years, and that's even pushing it. Painters will tell you actually need to do it every 7 to 10 years. And you wanna sustain your home for your own reasons, because you want to love living in your home. But also, if this isn't your forever home and it's something that you're going to sell in 10 years, this preserves the value of your home. But again, another great reason to own a condo. And if you are teetering on owning a condo or owning a house, we've got a great video on our channel, who should or who shouldn't buy a condo. Check that one out. I think that one released a few videos before this one. Okay, moving on. You'll want to know all about the financing before you go out and look at homes. So we'll get people sometimes who call in because of this channel, and they'll say, Maila, I'm on vacation, I'm staying in Waikiki, and I fell in love with Hawaii. I need to go out and look at this place on Saturday. And I'm like, okay, well, we want to have a conversation with you to pre-qualify and to understand what are your true goals. If it's really just, I fell in love with Hawaii and I need to go look at homes, we're going to encourage you to go ahead and look at open houses. We're also going to encourage you to get to know neighborhoods and to really dial in on the neighborhoods. And we're going to talk about that in a moment. But let's talk about the financing first, because of course, if we don't understand financing, we can't go out and buy. There are FHA loans available. This will enable you to put 3.5% down rather than that typical 20% that you hear about. This is a loan program that a lot of our local buyers didn't realize existed. This is also a great program for those of you that have less than stellar credit. Just know that there is going to be mortgage insurance. Typically, it's going to be with you throughout the life of the loan until you refinance out of it. There's the VA loan, which is 0 down for those who have served in the military or who are currently serving in the military. We work with a lot of VA buyers. There's the USDA loan. This is also a 0 down loan. It applies to areas that are classified as rural, and those areas are going to be Waianae, Ewa, Kapolei, Mililani, Makakilo, Kaneohe, Laie, Waipahu. Now, caveat to this, don't fall in love with a home on Zillow and Mililani and be like, well, I'm going to use that zero down USDA loan. It's even specified to certain pockets of different neighborhoods, and these areas can often change. So again, you'll want to be in a really good conversation with a lender to understand where this loan applies. You've got your conventional loan, which is always going to give you typically the lowest interest rate, a little bit more flexibility. This is for those who have great credit, who have that 20% down. Adjustable rate mortgages, people have been utilizing these as a great tool in this higher interest rate environment. Today, we're at 6.375%, which is still not the highest. It was 8% back in 2022. So we are a little lower. If we were in the fives, I think it would make people feel a little bit more comfortable and we would see more activity. But going back to the adjustable rate mortgages, the 3-2-1 buy down is one that's been pretty popular. And what this is, in year one, your interest rate's going to be discounted by 3 points. In year 2, it would be discounted by 2 points. In year 3, it would be discounted by 1, and then it would resume for the remaining 27 years at the 6.375% or whatever interest rate you got at the time that you purchased. It's a great tool. Usually people are hoping that they're going to be able to refinance by year 4, but nevertheless, you'll want to make sure that you're comfortably qualified for that higher rate. Interest-only loans, I bought my first place with an interest-only loan. So back when I bought 20 years ago, the interest rate was like 7% or in the sevens. We got a 7.25% rate, but we did an interest-only for the first 10 years at 6.75%, and then it would re-amortize for the next 20 at 7.25. Our goal too was, well, maybe we'll sell the place before that 10 years is up, or maybe we'll refinance. We did refinance like 2 times in that 10 years, and then we actually ended up selling after 10 years. There is the MCC loan. This one's not always available. The money kind of comes and goes, but it stands for Mortgage Credit Certificate. An example of this is if you're paying like $20,000 in mortgage interest and you've got a 20% mortgage credit certificate, that's going to give you a $4,000 tax credit. This is where you'll want to look at your entire financial picture just to make sure that it makes sense for you. Koa and I both have had many buyers that have utilized this program, and it's been really great for our first-time home buyers. There's the Hale Kama'aina program. This is one that was introduced just this year in 2026. It is income-based, so you can't make a certain amount of money, but it does enable you to have a lower interest rate, sometimes 4 and 5%. Again, very specific and one where you'll want to understand it with a lender. There's the Hawaii Homeownership Center. So this is one where you would attend classes, and then at the end, they would help you with down payment assistance, and just different loan programs that are great for first-time homebuyers. Koa actually utilized the Hawaii Homeownership Center. Mortgage insurance, this is one that I'm not a lender, I'm a real estate agent. I don't exactly know how to explain it. And even when I talk to lenders and ask them, can you tell me exactly how much mortgage insurance is? They'll say, well, it depends. And that's really an answer that we give a lot in this industry and in real estate, because really every sale, every buyer's situation is different, and it's no different when it comes to financing. Of course, there's using a home equity line of credit or obtaining bridge financing. This is for those, for example, that already own a home, that are looking to buy something else simultaneously. They're not able to sell their home and then buy something else now. I mean, again, this is one that depends on a person's situation. Home equity line of credit would help you to bridge to buy the next one. We really caution buyers with this one because, again, you want to make sure that you are comfortable and that you have a really good tolerance for if you need to carry both for a certain amount of time. And then there is also gift funds. This isn't available to everybody. I didn't have a rich uncle. My parents weren't rich enough to give me any sort of gift funds, but there are a lot of buyers out there that have this luck that they're able to utilize gift funds from somebody else. In some of the affordable condos, they'll also say, like, it's okay if you have a mom or a dad or an uncle that's going to gift you some of the money for the down payment. So that's another option for you as well. Okay, moving on, let's talk about identifying a neighborhood before you fall in love with a house. So a lot of times we get on Zillow or we're on Instagram and we're like, oh my gosh, look at that house. I love it. I've had buyers that have called me saying, I saw this condo, it's on the beach, it's perfect, it's like $200,000 and it's in this area called McKay, and I'm like, Makaha? Yes, that's the one. And then of course we have a very real conversation about where Makaha is, what Makaha is like, and while the unit itself is like Pinterest perfect, the neighborhood may not be something that suits this particular buyer. So we're always going to encourage you to start first with neighborhoods and identifying the neighborhood that you love. Now, of course, what you qualify for is the most important, and then we take what you qualify for and then we look at the neighborhood that you love and we determine whether or not that neighborhood fits your financial profile. It's tough when people come to Hawaii or have an intent of buying in Hawaii and they're like, I just love Oahu and I just want to buy somewhere. This is why we do a lot of the neighborhood videos that we have on our channel, because we really want you to kind of like narrow down, and we want to help you be as efficient as possible in identifying the neighborhood first and then going to look at the house. And one other thing to keep in mind is you can renovate a kitchen, but you can't renovate your neighborhood. So just a really important thing to understand. Okay, before we move on to understanding the contract, let's get a little bit of an understanding of this unit, this building, and this neighborhood, just as an example. This is listed by our friend Canny Chum from Locations. We're so grateful she's allowing us to come in here and show it to you today. This building was built in 2016. It's got higher ceilings than normal, so it does create just a little bit more spaciousness. You've got 1,000 square feet in this unit, which is pretty generous for a 3-bedroom and just for a townhome or a condo in general. Again, $700 on the maintenance fee. That covers water, sewer, you've got 24-hour security, you've got some nice amenities. Hawaii Kai in general, I love it. People will ask me often, well, what about the traffic? And I'm like, there's not really traffic, but let me be real. This morning I had an 11 a.m. appointment in town and I showed up 20 minutes late because there was a car stalled in the right lane. In addition, they were doing some road work. So when things like that happen, it can take you like an hour to get to town. But for the most part, the traffic flows. Schools are really great in Hawaii Kai. You've got sidewalks, just a great place to walk and ride a bike. Really nice weather. Is $855 a good price for a 3-bedroom? I would say it is. It's pretty good. There may be some negotiation because units are sitting on the market a little bit longer. This building is one that I consider a smart buy. I just feel like the maintenance fee is really good. What you get as far as amenities is a lot. They've also got units in this building that are flex spaces. So there's a 2-bedroom on one side and then a 1-bedroom on the other side with a door that separates the two. You can live in one, rent the other one out. I've seen, families move in with mother-in-law. Yeah, it's a great building, and I think not enough people give it attention. One of the drawbacks to it is that there's no lanai or yard space on most of the units. A few units do have a yard. So again, that's another thing to gain a really good understanding of. Is a lanai or a yard important to you? Number 4, there's all kinds of real estate on Oahu. Typically, it's like condo, townhouse, or single family home. But even under those 3 classifications, you're going to have all kinds of different homes. Condos, for example, might be a walk-up or might be a high-rise with an elevator. Typically, most of the condos on Oahu are going to be something built between the 60s and 70s, and then your newer buildings are all mostly going to be in Kaka'ako. Then you've got your townhouses, which in my opinion are going to be the best way to get into the market, or something like this in Hawaii Kai, Hale Kalai. And excuse me, I said earlier this was a 2-bedroom. It's actually a 3-bedroom, 1,000 square feet, $855,000. Maintenance fee here is around $700 per month. We usually like to see maintenance fees around $1 per square foot or less, although most of the maintenance fees on the island now have risen above that dollar. But if you can find something below, we would say that's a great buy. There's also, different insurance situations, different financing situations based on whatever you're looking at buying. You've got older construction here in Hawaii. So mostly everything on this island was built like 70s, maybe 80s, but even going as far back as the 40s, the 50s, sometimes even in the 30s. We were up in Mauna Heights yesterday, and we were looking at comparable sales for one of our possible listings, and there was a house we were comparing. It was built in 1939. So you've really got all kinds of real estate here on the island, and it's a matter of really understanding what appeals to you before you just go out on the island and say, I want to buy a house. Your newer construction, of course, is going to be Mililani, Koa Ridge, Ho'opili, Kapolei. Newer, I'm talking like 2000s, even some of the early 2000s. You've also got post and pier foundations. We talk about that a lot on this channel. There's not going to be basements usually. Carports versus garages. Then you've got multifamily properties. We just looked at a listing this morning in Kalihi where the main living space is on the main level, and then down below they finished a basement to make it a living space. And this is something that's really common here in Hawaii, where we're just like, we're trying to make it, we're trying to maximize. And so living and buying with family or having another spot in the house that you can rent out to somebody else becomes something that's really a hot commodity. Not every house is built the same in Hawaii. Not all lenders treat every house the same, and insurance doesn't get treated the same with every house. Moving on to number 5. Looking at listings online is not the same as truly understanding a home. So with all of these different types of real estate we have in Hawaii, our goal is to help you to really understand the flood zones, the zoning. Is it R5? Is it R10? What does that mean? R5 generally means you can have one house per every 5,000 square feet of land. If you have an R5 zoned property and you've got 10,000 square feet, typically that means you can build 2 homes. Or maybe you can't. My house in Hawaii Kai, I have R5. I'm on over a 10,000 square foot lot. There's still kind of a question mark behind whether or not I'd be able to add another house because of the CC&Rs in the entire community. So nuances that we really want to help you understand. Also, when we go and you finally identify a house that you like, Zillow is only going to tell you so much. It's going to show you the pictures, it's going to give you the price, it's going to give you the Zestimate, but you know, what are the other houses in the neighborhood actually selling for? How long are houses sitting on the market relative to the pricing? We really go deep with you in understanding that and helping you to formulate the right offer that's going to help you to win, but that's also going to be fair and in line with the appraised value. One more thing to understand, and this is something that's changed a little bit in our industry, and maybe it's a little bit of a side note, but there is a buyer's representation agreement that's required by the National Association of Realtors before we ever even go out and see homes. In a nutshell, it just formalizes our working relationship with you. It also explains the commissions and how we get paid. And if you're interested in knowing more about that, that's a private conversation that we'd like to have with you. But a beautiful listing photo and like a good property, it's not automatically the same thing. And so this is why you want to hire us and you want to work with us, because we're going to help you to understand the property and not just to kind of like it. Okay, let's talk about writing the offer. Really, let's start with the mindset of the offer. Now, sellers don't always just pick the highest offer. They're gonna pick the one that is also the most likely to close. I was reviewing offers this morning with our sellers, and we had multiple, and there was one that clearly stood out on price, but there was one slightly behind it that expressed a higher level of commitment, that expressed gratitude, and not just like in the conversations that I had with the agent and with the buyers themselves, but in just it was reflected in the offer. Some of the terms were a little shorter, terms weren't necessarily omitted, but just the way that the buyer's agent had chosen to handle some of those terms just showed that the buyers were really sincere and really committed to the property. So we actually chose the one that was in second place and put the first place one in backup position. If you're a buyer and you end up in backup position, it's not like you're the first place loser. Actually, we are seeing the highest rate of cancellations in the industry right now. And so typically being in the backup position is like you've won, because if that first position falls out for whatever reason, because they couldn't get through the inspection, or maybe they just saw something else and changed their mind, the seller will come back to you as the backup buyer. All right, let's get into understanding the contract and the main contingencies. So of course, we're gonna look at all of the relevant comparable sales in the area, how it stacks up with the house that you've identified and that you like. You will probably look at between 5 and 7 different homes before you land on the one you wanna actually make an offer on. But looking at like 10 to 15 homes, that's not really typical. I will say though that there are some buyers that once they're ready to go, they go out and they shop and they find the house after like 1 month. Other buyers might take a little bit longer, but typically we're doing it in 1 month. We're making our first offer. So we're gonna settle on a price, and then if the seller decides to accept your offer, then you're going to submit your earnest money. What is earnest money? It might be like 1% of the purchase. You're gonna deposit it with an escrow company. We'll get into what an escrow company is in a moment. Your biggest contingency once your contract is actually accepted is your inspection contingency, and usually that's going to be between 10 and 14 days. This is a time frame that gets negotiated with the seller based on what your overall closing time frame is. The most ideal closing time frame for most sellers is going to be 30 days from the time they accept your contract. 45 is kind of like standard, but sometimes it'll stretch to 60, and usually it's because the seller is like, I actually need a 60-day close. Maybe there's a tenant in the home that needs to move out. Maybe they themselves are still living in the home and they need to move out. But this inspection contingency is going to line up with whatever your closing timeline is. Usually a seller is going to want to see a shorter than longer inspection timeline, because this is the contingency where you can back out for any reason. You don't have to say, you know, I didn't like what was on the seller's disclosure, which said blah, blah, blah. Like it's literally like you can just say, hey, I changed my mind. I don't want this house anymore. And then you get back your earnest deposit, no problem. You're gonna hire a professional home inspector. They're gonna test all of the appliances. They're gonna look under the house. They're gonna climb on the roof. If there's a pool with a single family home, they're gonna jump in the pool. They're gonna put cameras down there. If you're buying a single family home, we're gonna recommend that you do a sewer scope. We're gonna have a plumber come in, put a camera down the pipes, just to look at the drains, because a lot of our drains are old here on the island. So we wanna make sure that there's no breakdown in there and that you're not gonna end up with a huge blockage later on that's gonna cost you like $40,000. Mostly we're looking for things that are safety, that are structural, not really cosmetic, like if there's a scratch on the wall or if there's a gap in the flooring that's truly cosmetic, that's not affecting the structure or the foundation of the home itself. Those things you're gonna kind of let go. But if there's like something leaking, if there's an electrical breaker that's overheating or double tapped, if there's appliances that aren't really working, that weren't disclosed, that's a really important factor to note. This is going to be our opportunity to ask the seller, hey, are you willing to offer us a closing cost credit to allow the buyers to go and fix this on their own after closing? Or maybe you're going to opt for asking the seller to actually fix it before you close with a licensed professional. Again, it all depends on your tolerance. It all depends on what the seller is willing to negotiate on. It also depends on the price that you're in at. So we had buyers recently that were in escrow on a place and they were already in under the asking price. But the understanding with that was, okay, we're gonna let you buy this for less than what we listed it for, but we're also going into this with the understanding that you're buying it as is. And then they negotiated through the inspection. There were some leaks and things going on, and it just, at that point, the buyer and seller couldn't come to an agreement. Buyers didn't feel good about it, sellers didn't feel good about it, and so they went ahead and canceled, and that was okay. But just know that this inspection period is really for you to get as much information as you can about the home before you actually close on the home. This inspection enables you to continue moving forward. Also know though that you're not gonna find out every single thing in this inspection. There's things you're going to learn about the home. Usually they say you learn everything there is to know about your home after living in it for a year. But we're going to do our best to help you to be as informed as possible so that you feel good about what you're buying. Okay, once you pass that inspection contingency, typically there's going to be a second deposit that's due to escrow. This deposit becomes a little bit more cemented. So if anything else kind of arises after this, we really have to make sure that we are justifying why you're questioning something. So for example, the condo docs, that's another contingency that's going to take place. Usually condo docs, if you're buying in a condo or association, will be delivered 10 days after the acceptance. And then you'll have like a week to review the financials, the house rules, the reserves, the schedule for some of the capital improvements going forward. If anything in those condo docs isn't acceptable to you, you will be able to cite that and say like, hey, I don't feel comfortable moving forward at this point. Will you get your deposit back? Yes, you will, but we just have to make sure that we're really performing in line with the contingencies and the dates of the contract, because if you ever fall outside of a contingency, the seller can opt to hold back your deposit or at least some of it. So we just want to make sure after that inspection contingency that you're being really sincere going forward. An appraisal, if you're getting a loan, the lender is going to call on the appraiser to go out and give a value to the property. Of course, the lender's not going to be able to loan you any amount over what's appraised. Usually homes are coming in at value. We typically don't see them come in over value. We do see them come in under value. If they do, at that point, there's another negotiation that takes place. Either the seller's going to agree to sell it to you at an adjusted price that's in line with the appraisal, or maybe in the beginning of the contract negotiation, we are going to say like, hey, the buyers really want this house bad. And this is you telling us, we want this house bad. We'll put in an appraisal clause, meaning we're going to put in a little bit of extra cash in case that appraisal comes in low. That's getting a little bit into the weeds with you, but just know that the appraisal is another opportunity potentially to negotiate. Now, if that appraisal comes in at value, you continue to move forward. You've also got a termite inspection contingency here, so you get to choose the termite inspection company you're going to use. Usually it's a cost to the seller. The inspector goes in, knocks on the walls, looks for live termite activity, even looks for termite damage. If there is live termite activity and the termite inspector prescribes that there needs to be some sort of treatment, it is in the contract that the seller needs to pay for whatever treatment is prescribed. If it's a single family home, usually it's tent fumigation. If it's a condo, usually it's spot treatment. After the termite inspection, on a single family home, you're gonna have a survey. Professional survey is gonna go out at the cost of a seller. They're gonna check on all the boundaries of the home, make sure that a neighboring property isn't encroaching on your property or that you're not encroaching on another property. If there are encroachments happening, those will also be sorted out. That will become another point of negotiation. Really, beyond that, it's your financing contingency. So it's on your lender to provide a conditional loan approval and then finally a final loan approval. At the point that you've gotten conditional and final loan approval, you're really in and there's no changing your mind at that point. At the very end, you're gonna do a final walkthrough. The final walkthrough isn't really like another inspection, but it's just ensuring that the property is in the condition that it was in when you decided to move beyond the inspection. We also just wanna make sure like the refrigerator's still there, because typically refrigerator, stove, AC, ceiling fans, if attached, as attached is kind of how the contract reads, and we will specifically check off the things that are staying. This is one that's really important. So most vacant properties are staged. The furniture usually doesn't stay. We ran into that with some buyers a while back that didn't know that the furniture was gonna go, and we didn't write explicitly into the contract that they wanted the furniture. So when they did their final walkthrough, they were pretty disappointed that the furniture was gone. And just being first-time home buyers, it was something that they just didn't even know to ask. So typically the furniture doesn't stay unless it's a conversation that you have explicitly had. Oh my gosh, that was so long. Okay. Number 8, let's get into what escrow is, and this one's going to be fast. Escrow is basically organized chaos. They are the non-affiliated third party to the transaction. So you've got me and Koa as your buyer's agents, you've got the listing agent, and then you've got your lender, and then you've got the surveyor, you've got the termite inspector, you've also got, let's see, who else do we have? You've got money coming and going from both sides. So money coming from you, the deposit of yours, and then the lender also funding your loan. And then you've got the money at the end that needs to go to the seller. It's going to pay off the seller's loan if they had one. Anyway, like I said, sounds incredibly chaotic. Escrow is keeping track of all of this. They're also coordinating property taxes. They're coordinating any prorations on the HOA fees. Let's see, organized chaos. And none of the money gets paid to us at any time. The only money during the transaction that you as a buyer have to actually supply to anybody is going to be your professional home inspector. So that's just between you and them. And then of course, any monies that are going into escrow for your loan or for the purchase itself, we get paid by our brokerage, which also comes after the closing of the sale. So none of the money you're putting out, we don't ever see it until you get your keys. Okay, that was escrow. Hopefully that covered all of it. Finally, number 10, I think this is finally, no, maybe this is 9. Building a home. So we get asked a lot about this, about like, is there land that I can buy? Can I build? And I just sorry to generalize it, but I want to say, try not to romanticize building a home. It's really hard. Now, there are people that have the cojones for it. They've done it before, and this is just their thing, hiring an architect and having the topo survey and getting all of the permits and putting in the infrastructure and having the financing that enables them to do it. I mean, we're talking having to corral so many different contractors, from electricians to roofers to plumbers. I mean, you might have one general contractor that's gonna run the whole thing, but I've got friends right now that tore down their home and they're building it, they're building the home of their dreams. It is the most stressful thing they have ever been through. They talk about the stress that it puts on them as individuals, that it's put on their marriage. They were talking the other night about the hallway and how the builders kind of messed it up and they had to actually walk sideways through the hallway. I mean, there's all kinds of things that can happen. I think building a home is an incredible thing. And if you truly have the tolerance for doing it, then yes, we're gonna help you accomplish it. But also, more importantly, just vacant land is it's not something that's readily available all over the island. Now, ag land, yes, we've got some of that in Waianae, we've got it in Waialua, there's some of it in Waimanalo, but yeah, I wouldn't recommend to most first timers that this is a pursuit for you. And then, okay, this is the last one. Buying from abroad or being out of state while you're purchasing. We have this quite a bit. So not only people that are just moving to Hawaii, whether they're in the military or coming from California or whatever, but I'll have buyers actually that are moving back home. We've got 2 right now that are coming back home from Washington, and they're buying before they get here. And they're like, is that gonna be okay, or do I need to fly there? Everything can really be done remote. Showings are really easy to do via FaceTime. Now, we do like for you to come and actually walk through the property. If it's a competitive property, sellers are often gonna like that you actually saw the home. And this is where a lot of times a buyer that actually walked through the home, expressed their commitment, their gratitude, their love for it, is gonna get chosen, even if your offer is higher, just because there was that feeling, between the buyer and the seller and the agents, and there's just that real solid commitment. But just know that you can buy from abroad. We can conduct everything for you. We just did it for buyers in Ho'opili. We were in touch with the developer. We did their inspections. We did their home orientation tour, FaceTimed them. I signed off on all of their warranties for them. Your paperwork also at the end, your closing documents would be sent to you, and you would have a mobile notary that you would sign with. So yeah, just know that that's not completely impossible. It's really not even hard. Our goal is not to get you to buy a home, but to buy the right home for your finances, for your lifestyle, for whatever season of life you're in. We'll even talk to you about your exit strategy and some of your goals going forward. We've got clients right now that are looking at buying a condo, and they're looking at also selling the home that they're currently in because they're on the verge of retirement, and they're looking like 10 years down the road, and we're really assessing the HOA fees and the electrical costs and all of the things that are going to add up at the end of that 10 years and whether or not it's worth it to them. We love having those conversations. If you are interested in working with us after watching with us, please get in touch with us at info@dwellhawaii.com. Thanks for watching.